Ain't nothing like a sideways party, just Bitcoin doing nothing party. Yes, after pumping back up to our resistance order block, Bitcoin has done absolutely nothing for about 16 hours. Let's see if we can get some live action on today's show. Former chairman of the Federal Reserve Bank, Alan Greenspan, warns negative interest rates are coming to the United States. The XRP army calls out for Ripple to continue dumping their token, and Binance has targeted Tether with their new solution to stablecoin liquidity. All this and more on today's exciting episode of Breaking Bitcoin. What's going on, guys? Welcome to Breaking Bitcoin, recorded live here in the studio Thursday. It is September 5th, 2019. Your daily source for market updates, sentiment, and news for traders. I am your host, Justin Wise, lead analyst and senior mentor at CrackingCryptocurrency.com. Hopefully you guys are doing absolutely fantastic wherever you happen to be tuning in from, and whether you're watching us from across YouTube, Twitch, DLive, Facebook Live, or on Roku with the Investor News Channel app. If you want to support the show, make sure to subscribe, hit the notification bell because the YouTube algorithm doesn't seem to like crypto YouTubers. Follow, share, and engage in the live chat. Hitting the thumbs up button is mandatory, and let's get started with today, giving away some crypto. By the way, today's show is brought to you by the Cracking Cryptocurrency Premium Trading Group. If you are a new, aspiring, or experienced trader who is looking to sharpen your skills and you want to work with a team with a proven track record who deal in the realm of probability, statistics, and verifiable edge, make sure to head over to premium.crackingcryptocurrency.com to see what the Premium Trading Group can do for you. Exclusive setups and signals, the Pathways to Profit strategy building course, proprietary indicators, spreadsheets, and tools, as well as our educational material and database library. Come join the fastest community, the fastest growing community, that is, of traders and investors in cryptocurrency at premium.crackingcryptocurrency.com. We've got such a fantastic show for you today. Let's start, as we always do, by giving away some crypto. I want to thank yesterday's crypto comment giveaway winner who was kind enough to ask for those proceeds to be donated to charity. So I have donated them to the Water Project. And I want to thank last month's and current crypto comment giveaway sponsor, X42 Protocol. Make sure to go check them out at x42.tech. All right, back in the live scene. Coming live to you today from Candyland, apparently. From the beautiful rolling hills in the background. Hopefully you guys are doing absolutely fantastic. Let me know how you guys are doing in the chat. And we are going to pause the music as we continue right along with today and what we're going to be doing. So we've got the random comment picker here. We're going to load the comments from yesterday's video. Yesterday was such a great show. Make sure you guys go check that out. We talked about the United States potentially talking about, regulating or banning crypto mining. I don't think it's actually going to happen, but who knows? Those people in Washington don't seem to be very smart when it comes to just about anything. We also talked about Bitcoin's price and what we're looking at overall in the macro and the micro, crypto coffee scams and CME gaps. Let's randomly pick a winner. And Lefty, congratulations, my friend. He says, I like the BitChair idea. As always, amazing show to you, Justin. Highly appreciated, Lefty. Thank you so much for participating and being a member of our community. Make sure to hit me up in the Discord at JustinWise5696, and I will tip you some crypto, my good friend. All right, let's get over into the charts, and we'll look at where we are. Is that really a My Little Pony in the background? Hey, did you? Don't mention it. All right. Kurakacha, what's going on, my friend? Steve, awesome content. Keep up the good work. Thank you so much, my friend. James Restoration says 70 people watching. Hit that like button. Thank you so much, James. Mash Dash, Dark Rico, Cryptonomics. What's going on, my good friends and people? You go chill. Crypto Jack. All right, we're going to have a good one today, guys. We're going to have a good one. Saintsy, Spectre Security Coin. Shout out to Spectre Security Coin. Cryptonomics. No, not a new chair. I didn't have time to set it up. Freeman's Cryptoverse. But we're going to get into that here in just a second, because I just created a Twitter poll for those of you guys following me on Twitter, and we're going to link that Twitter poll here in just a second. And again, as I said yesterday, we're going to let you guys choose the winner. I'm probably going to get the new chair set up over the weekend. I'm just, man, there's so much to do. You do not want to see the lists of the stuff that I got to get done. But it's a rewarding life. It's a rewarding life. I spent, I got a lot of stuff I got to do. So anyways, so setting up a chair kind of fell to the underground, but it's going to get done. Very Boffin, what's going on, my man? Rich M says, do I believe the inverse yield curve gives a good insight to if and when a recession will occur? And if I foresee a recession in the future, any financial moves to set yourself up for the worst? So here's the thing. When we talk about recession, most people don't really understand. I would say that most people don't really understand what caused the 2007, 2008 financial crisis. And I think that there is, and again, I could be wrong about this, because nobody knows anything, right? And nobody knows the day when Christ will return, as they say, and again, I mean that as an analogy, not as a specific religious, allegory. So here's the thing. The 2007, 2008 financial crisis, as well as the, stock market, panic back in 1929, all those were caused by very specific economic conditions. So in the case of the 2007, 2008 economic crisis, you had mortgage-backed securities. You had collateralized debt obligations. You had the amount of collateralized debt that was insured by companies like AIG, which had ballooned from about $600 to $900 billion to $62 trillion. And of course, the companies did not have the money to cover that. So naturally, when the debt came due, you had the federal government via Fannie Mae and Freddie Mac reducing all natural risk incentives for banks to be more discriminatory with their lending practices. You had investment banks that were pulling all these mortgages off of banks and basically taking all risk away from them, and then packaging them up into these mortgage-backed securities and then selling them on the open market. So you had all of these occurrences that were happening simultaneously. And when naturally people that couldn't afford homes stopped making their mortgage payments, that caused the entire system to collapse. And the big ticking time bomb in that situation was the astronomical amount of collateralized debt obligations, the amount of debt that was being insured by companies, and the insurance companies did not have the money to manage it, as well as the speculation on those CDOs. From the investment banks themselves that were packaging up the companies. And so obviously we saw the crack begin with the Lehman Brothers, investment bank, and then that spread out to the rest of the financial firms. I don't see that as a ticking time bomb right now, right? So I'll not be silly enough to sit here and say that we don't have an economic situation. But again, we've ran an unbalanced budget for literally decades. We've been, the pensions have been, bled dry for quite a long time now. And the federal, the government is basically going to be having to turn, as they've had to more increasingly, to just the Federal Reserve to borrow money from, because nobody else is really willing to lend to the United States government because their debt is too large. So that is a problem. But I don't see that as a problem. And I see the stock market dropping 50% overnight. Can that happen? Yes, it can. But I'm not aware of a ticking time bomb on the magnitude and order of the amount of debt that was uninsured in the housing bubble that was inflated. I don't see a massive bubble. I think that stocks are quite high relatively in their valuation right now. But some are and some aren't. Some stocks are still pretty good screaming buy deals. I think that overall the economy looks pretty healthy. I think that overall the amount of employed looks pretty healthy. I think that the companies are doing quite well. I think the profits are doing quite well. I think that things look problematic on the outset. I think that we will eventually move into a recession as the federal government is forced to adopt some method to balance their budget. Eventually, the federal government will be forced to cut spending, right? If they do not cut spending, then we will be pushed most likely into some form of warfare or civil war, right? Because that just exacerbates tensions. At some point in time, the government is going to have to agree to debt restructuring or to a balanced budget. I don't think that we're going to have the massive austerity cuts that something like Greece did. I just don't see that. All of those things could happen, but I think that those are more unlikely than us moving into a more mild recession. I don't see the ticking time bomb that's going to cause these massive panic collapses overnight, because I don't see a massive bubble that exists right now. I think that within the next 5 to 10 years, we will most likely enter into a recession. But as far as I see it right now, I think that there will most likely be a fairly mild recession. And again, this is something I could be absolutely wrong about, but that is the way that I look at the market right now as an investor, as somebody who holds and buys stocks, as somebody who is invested in the market, as somebody who holds and buys real estate, as somebody who is well diversified. So, yeah, as far as the inverse yield curve, I think that it is a meme, because yes, like, correlation does not equal causation. And one thing that's happened so many times, it's only happened a few times, and people point to that as a looming economic recession indicator. And as I said, but we've seen the yields invert and reinvert several times, right, already. So, the first time it happened, it was like, oh my God. And then the yields uninverted, and now they've inverted, and it's like, come on, man. Like, I think that we definitely have the potential to build up a massive bubble, like the stock market crash of 29, and like the what do they call that? The minor recession of 2007, 2008. But the financial crisis is what it's most likely called. But both of those situations were caused, in the case of the 1929, Great Depression, that was literally caused by a massive bubble in securities, a massive bubble in stocks. Everybody and their sister was buying stocks. And in the case of 2007, 2008, that was caused by a massive bubble in the housing market. And I do not see a bubble like that currently in the economy. I see that things are not looking healthy long term, mostly because the federal government refuses to balance their budget. And that is going to suck, right? That is going to grind the economy down a little bit. But the nice thing is, if the government pledges to reduce, for example, we could have a balanced budget in 5 years. All the government has to do is cut spending right now by 10%. All spending by 10%. The government were to cut spending by 10%. And when government says they're going to cut spending, what they really mean is they're going to not increase the budget as much as they intended to. So that's what politicians mean when they're like, we're going to cut the budget 10%. No, that means you were planning to increase the budget by 50%. You're only going to increase it by 40% now. That's what you mean by cut spending. So I mean all the money that the federal government is spending right now needs to be cut right now by 10%. And in 5 years, we'd have a balanced budget if they did that and stuck to that. Now that would stop the bleeding. That would give us a balanced budget. And then if they kept that stable, the economy would grow over time to be able to start paying down the debt. It's not an unsolvable problem. It's not an intractable problem. It's difficult to do, and it's going to be difficult to get everybody on the same path, but it is mathematically quite easily solvable. Now, sorry, let me get back to these. Sancy, thank you so much for the £5, my good man. He says, just because you are a legend. Thank you so much, man. Highly appreciated, my good friend. Thank you so much for the support, and you are killing it, Brian. Love you, brother. Gecko Wizard says 100,000 Bitcoin in 1 year. Hell yeah, man. Chowdery says, have I seen the news? A huge database, 419 million records of Facebook users' phone numbers found online. Long live blockchain, man. I feel you, dude. God damn. Anthony Cavallo, thank you so much for the $10 donation, my good friend. He says, would I suggest using lower timeframes for charting profit when a cryptocurrency is ranging in higher timeframes? If so, would suggest a change in indicators from your main setup. So there are two ways to approach this. First off, generally, no, I don't recommend going down to lower timeframes unless you're going to be very specific about what you mean by lower timeframes. So lower timeframes are typically going to mean 1 hour and below, and I don't generally recommend that people go to those timeframes, especially if you haven't been trading for 2 years, maybe 3 years, because by the time you've been trading for several years, you have, if you're being successful, you have quite a bit of emotional control and discipline and patience. And you've gotten rid of most of those jitters that make traders lose money in the interim, which is going to be desperation and greed and impatience and impulsivity. and lack of emotional discipline and control. So all those things are very important to have success down there on those lower time frames and scalp. And you do want to have a specific strategy when you go down there. But again, PTP is a strategy that can be scaled up or scaled down the way that I trade. It's just objective, and you look for a specific trigger to initiate your trades. Now, as far as... So no, my recommendation is to be a trend following trader. And when the market's ranging, don't trade. It's that simple. It's not your edge. You're not going to do well in that market. Now, you can develop over time, and this is the course that follows PTP, will follow PTP, is how to switch from a trend following strategy to a ranging strategy where you are trading reversals. But I generally recommend that people do not even think about that until they've been in the market for a year or two, at least, because you need experience and you need discipline. It's going to be difficult enough. I mean, again, it's doable, but at least we put you on the right path. It's going to be difficult enough to dedicate yourself to, I'm going to trade my edge and only my edge and not look at any other data. And then you do that, and then you make money. Whereas when you try to compare yourself to other people or follow other people's charts or follow other people's setups that are not trading your edge, that haven't back tested your strategy, you lose money almost all the time, right? And it's infuriating because you're like, oh man, like look at all these other people like doing this and hitting this trade, and my system didn't signal there. Like my system needs to signal there. No, your system doesn't need to signal there. Your system just needs to give you enough signals to make you a profitable trader. You have to find your own edge in the market, and then you have to grind that edge down to a knife edge. So there is an edge in the market for trading ranges and reversals, but I would recommend focusing on your trend following strategy primarily. And then you can look into that after you feel very comfortable and you're pretty much on autopilot with your trend following strategy. But I think the simple answer here is that there's going to be a lot of times where you just have to look at the market and be like, I'm not trading. This is not an area where I'm going to be successful. This is not an area where I'm historically successful. This is not an area where I'm going to have a good opportunity to make money. And let the bots and algos kill it, man. Jack says, I don't think we have the political will for that. The appetite is for more free stuff. Yeah, I feel you, man. I feel you. But I think, here's the thing. Honestly, I was having this conversation last night with a very intelligent young woman. And we spoke about this fact that most people in the world are center, right? Maybe they're a little center left, maybe they're a little center right. It's very few people in the world who are radical, right? There's very few people in the world who are far left and far right, okay? And unfortunately, though, if you guys look up the economic theory of median voter theory, and this is basically explained with the analogy that the squeaky wheel gets greased. So there is an opportunity cost to learning about laws that are going to be passed, to learning who this law affects, to learning how to vote, to actually getting off your ass and going out and voting and making maybe like campaigning for the vote or asking your community to vote or getting support behind your vote. So 99% of human beings who are going to be affected by legislation that's passed on a yearly basis in the United States and across the world, the idea that's presented is in a perfect democracy, people vote for the ideas that benefit them and people vote against things that don't benefit them. But in reality, most people just don't vote because it costs time and effort to go educate yourself about this vote. And in a world where most people are working 2 jobs with kids and, they're just struggling to make ends meet, they don't have time to go find out what the local vote is, right? Or what's going on in the state level or what's going on. Everybody just pays attention to the federal level because it's like in the media, like it really matters. Your state politics affect you way more, but nobody wants to get off their ass and go down to City Hall. Anyways, so my point is, so only the people who a law will really, really benefit end up making a whole lot of noise. And that's going to be the people who are very, very opinionated. And that's the far left and the far right. And so the far left and the far right, people on both sides of the aisle, those are really the only people who tend to speak up and speak up very, very loudly about every single issue. And the politicians whose incentive is to get reelected, they just listen to that stuff. And they don't actually get to hear what the majority of Americans think because the majority of Americans aren't saying anything because they don't give a fuck, right? They don't care. They're like, just stop taking my money and leave me alone. And so the only opinions that politicians and the news and all this other stuff here is the far left and the far right. And so this idea in America is that, oh, we've become so polarized. Our rhetoric has become so heated. It hasn't. Those are just the only people that are really loud. So those are the only people that people think exist. The reality is almost nobody actually thinks far left and far right. Very few people do. Everybody is pretty much, most people agree on general values, morals, and how the country should be run, right? And this is like the insidious lie that's taught to people. They're like, oh, we're so divided. No, we're not, dude. Most people are rational, logical, like normal people who like can know what bullshit is and agree on most things. It's only some fucking really loud people over here and some really loud people over here. And that's fine. They're entitled to their opinions to be that far on either side of the aisle. There's issues where I'm really over here. There's more, just about every issue I'm over here. But unfortunately, that's all the news pays attention to because they're loud. And, you know, it's far more exciting, clickbaity, and it's just more entertaining when you got somebody that's ranting and raving about an issue and blah, 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 this and that, than somebody like me who's like, well, you know, like, it's good people on both sides of the aisle, but, you know, overall, I think this argument is illegitimate, and overall, I kind of determine, and, you know, people just eyes glaze over for the most part. So I'm very impressed that you guys can show up and hear me rant and rave about the economy and Bitcoin's price. When people are proposing a multi-trillion-dollar spending on a Green New Deal, I doubt we're cutting the budget any way you look at it. Well, that's just going to be a terrible idea. If you want to know about a ticking time bomb, it's going to be something like the Green New Deal, which is just ridiculous. What would be the settings for Wada Atar on a 15-minute timescale? I think the defaults would work really good, or you might consider pushing those numbers up. Typically, when you go down the timescale, when you go down in time frames, you want to go up, man. You want to make your indicator less sensitive the further down you go. And it depends on what you want the Wada Atar to do. Do you want the Wada Atar to confirm your trades to be a filter? Or do you want the Wada Atar to get you into trades? If you want the Wada Atar to get you into trades, then you want to err on it being a little bit more sensitive. If you only want it, or excuse me, you want it to be a little less sensitive. If you want it to confirm your trades and you know your primary indicator is really good, then you want it to be a little bit more sensitive. Yeah. Wook Chewy, what up, fam? Darren Garish says, not in today's political climate, dude. Much more radicalism. Well, maybe we disagree on that. That's my general opinion, though. That's germane because I just came across that after I made that dissertation. GBU Wally, what's up, man? Spectre Security Coin says, history shows it's not the peaceful majority that the issue is with. It is the violent minority that's the issue, which is a small portion of the right and left. The middle is common good folks, lol. Darn right, man. Media. Am I an ANCAP? Yes. Ferguson said, with you to the end, my friend. Either we're kings or we crash and burn, man. I hope not, man. Listen, no, climate change is real, man. You know, and you know, we can argue about, you know, listen. So here, this is gonna be controversial, but this is just how I feel about this. I think that climate change is absolutely something that exists. I think that it is most likely probable that human activity has some effect on that, right? Now, I tend to think that human activity has more effect on pollution, which I think is an issue. But I think that climate change is also, you know, something that happens naturally and something that we have to learn to deal with. And there's not a whole lot that we can do. I'm not sure that there's a whole lot that we can do to modify our actions to actually make any significant changes to climate change. I think that's something that we just need to develop better technology to deal with and figure out. So, you know, it kind of comes down to what can we do that will realistically make a change, and at what cost would that do to us? And I just cannot accept any of these like super radical ideologies that are like, oh, it's all our fault, and if we just dramatically change everything will get better. I don't think that's real, man. I think that's rainbows and unicorns. I don't think there's a whole lot that we can do, and I don't think that the majority of it's caused by us. I think that it's something that's pretty natural that happens when you live on a floating ball of rock that spins around the sun in the vastness of space. But yeah, I mean, you can't like, you know, you got to see the forest for the trees, man. Like, you can't if you break America's economy and if you reduce capitalistic incentive, then those are the people that typically solve problems, man. You know, Like I like to garden, my original degree when I first went to college was entrepreneurial and diversified agriculture. So I used to be really greeny. I'm a lot less greeny now because I've kind of like done a lot of research on those things. But yeah, man, I mean, I don't litter, I get pissed off when people litter. I'd like to leave the world a nice, clean, beautiful place. I'm kind of ticked off about the pollution of river streams, But as far as like global climate change, I don't know, man. Hi, brother. Thanks for your advice. BNB Pampin'. What do I think about BNB? It is part of my portfolio, but which I've talked about before. But let's go. We'll take a look at it, man. Let's put down. Sorry, I've ranted and raved quite a bit, but good chat engagement, man. Sorry. So now, at 31 minutes into the show, we'll get on with. Hey, this show is called Breaking Bitcoin. This dude hasn't talked about Bitcoin at all. All right, so we'll put down BNB, man. BNB Pampin'. BNB is not one I took last night. Do I like electricity and goods brought to the market? Nah, man, we're good, dude. We'll just sit back at home and use our psychic powers, man. Those goods will just magically bring themselves to the market, man. As soon as we get rid of the evil capitalist, right, the goods will just flow to the market, man. As soon as we destroy all the power plants, like magic electricity will just shine down from the sun. Come on, dude. Like, have you done no research? Right, yeah, we'll just get Bernie Sanders to crack open the Area 51 free energy technology. According to Elon Musk, it's not in there. Okay, so anyways, guys, let's... Okay. Let's get rid of the lines. Let's zoom out. Let's look at PTP. And we'll put the regular baseline on. Okay. All right, so where are we at, guys? We are within the buy zone. Okay, we're within the buy zone. We had a very nice volume spike on yesterday's daily close, right? We had a very nice volume spike on yesterday's daily close. Doji candle at the top of this up movement, right at the upper boundary of volatility at the top of our ATR band here, aka our qualifying line. We're not allowed to take trades above that. Again, depends on your strategy, because we talked about the volatility expander and we talked about that ATR band strategy as well. But we also have to realize that a close above this level would also be a significant break. So again, that's something that one really needs to backtest their strategy. And it really comes down to what baseline they're using. It comes down to what baseline they're using. And it comes down to what indicators they're using to get them in and out of trades. So we talked about the powerful signal from Wadatar explosion, right? And we talked about the fact that we don't get this powerful signal all the time. But when we do get this powerful signal, it is a very... it has a very high probability of bullish price appreciation following that signal. We can see it over here at the beginning of the market of the second round of bullish expansion in the middle of June. We can see it on this candle, and we are followed by a massive fuck you candle to the downside, followed by a brief pierce of the baseline, but then we do rally up to the upside. And I do believe, let's actually take a look. I do believe that... So the stop loss would have likely been hit on that candle. The stop loss would have likely been hit on that candle, yes. Okay. But this trade's fine. This trade's fine. Here's Wadatar, powerful signal. Here's Wadatar, powerful signal. Here's Wadatar, powerful signal. Here's Wadatar, powerful signal. Zoom in on those for you guys a little bit so you can see. Okay. So we don't get it all the time, but generally price follows. And what requires a powerful signal? It means that the Bollinger Bands are moving apart. The Bollinger Bands are moving apart, indicating price expansion as opposed to price contraction. When the explosion level in Wadatar explosion is falling, it means that price is tightening up. And when you have price tighten up and then it expands and breaks the level of resistance, typically you get a trend, right? You need price to compress. You need to push the bulls and the bears together. And then that is a battle. So when price compresses, it means that the bulls and the bears are feeling less confident. You have one trend typically pulling down, and you have one trend that is typically ramping up, and whichever way the market breaks is typically the way it goes, as long as you have some confirmation. And again, I think we have that confirmation with Wadatar Explosion. This will make a little bit of sense when we put the lines on the chart, and I kind of talk about what I think the rest of the trading community is looking at, so I can put that in the terms of classical analysis, but then I'll also correlate this to order blocks as well. But as far as the way that we trade, PTP, this is very simple. It's very clear and objective. Long signal on Minx from the daily. Long signal on Wadatar Explosion from the daily, a primary long signal. Now, on that same candle, now for the guys using the 8 and 10 setting on Minx, for the guys using the 8 and 10 setting on Minx, they actually did get the candle 1 bar earlier. They got the candle 1 bar earlier on the second when we actually did pierce above the baseline for the very first time, as opposed to the people who got the signal over here. Now, still, I want to point this out. You still would have not hit, to the best of my knowledge, you still would not have hit take profit 1. Yeah, you still would not have hit take profit 1 regardless of where you took the signal. So really entering at this point in time is really predicated on us breaking this level of resistance that's kind of sitting overhead at around 11,000 and really, you know, breaking out of this range to the upside. And, you know, one thing that gives me some added confidence in that is the fact that everybody and their mothers, as opposed, I think most people are thinking that we're really bullish. I talked about this yesterday. I think that most of the analysts and traders out there are feeling quite bearish. And the reason why is because they have this descending triangle meme that's been printed in front of them, or a falling pizza, or whatever you want to call it, to quote another YouTuber. And we're at the top of that resistance level, and people are being told that they should sell it, and that price will fall back down to the $9,000 level, which is where they should buy it. And then we might see a breakout, right? Or a breakdown, right? Now, I still, it's very difficult for me to shake my macro bearish feeling. And that really came from us closing below that weekly baseline, right? So if we go to the weekly time frame, we can see that kind of chart pattern playing out a little bit more clearly here, lining up very well with our daily and weekly wicks there. And again, where did the weekly wick off of? The same place that the daily wicked off of, right there, and our order block as well. We've actually tapped that order block twice on the meso time frames, the 4-hour and 2-hour time frames. But we did close below that baseline. We did close below the baseline on the weekly, and that really means something to me. Now, granted, we haven't had a extremely bearish signal like the 13 crossing underneath the 55 on the weekly time frame, which would be a baseline cross under, which obviously would be an extremely bearish signal. We also had two subsequent bearish monthly closes, which I think is important. When you start seeing lower monthly closes, that really tells you which direction the market is going. And so if the monthly does close up here, we'd be seeing a pretty important reversal, I think, in this change in trend, because this would be what candlestick analysts are going to call a bullish engulfing candle, not only on the monthly, but also on the weekly, which is typically considered a bullish sign, meaning that you just get a sudden spike of bullish volatility. But, I want to caution you guys to kind of not think that way, because look at all this volume coming in on Bitcoin. And the reality of the situation is, this is what consolidation looks like. And Bitcoin just prints big candles. So just seeing a big candle, unfortunately, doesn't really mean shit in the realm of Bitcoin. It's not really I don't think that one candle is indicative of the market, as in other markets where one big candle in the right direction can be fairly indicative of a trend. But anyways, I digress. So anyways, took the long position from the powerful signal of Wadatar Explosion because Minx was also bullish as well. And really, that would be predicated on the idea that everybody is wrong. And I think that they are. I think the classical chartists are most likely going to be wrong here. Selling the top of this area, I really did not expect us to have a bounce from here. Obviously, when you look at the, here's the thing. I don't like trading patterns that have the high probability for hindsight. So that is how most traders will trade. The problem with putting these chart patterns on the screen and then attempting to trade them is that you see something like this and you're like, okay, great. Well, yeah, when price goes down to 9,800, I'm just going to buy, and then I'm going to sell at 11,000. But 9 times out of 10, you actually don't do that. Because you have very little conviction in your method, and you are basically trading the analysis of somebody else, which is why we trade a different way. We have a very objective and clear signaling system that tells us when to act in any market at any time. And you need to do that. And you also need to go through the work of testing that system to make sure that it has historical profitability. And then you need to test it in real time to see how it works. And then once you do that, you'll feel very confident and you'll have no problem with conviction, which often is the problem for traders. It's not intelligence. It's not ability. It's not mathematics. It's conviction. It's the ability to act when it's time to fucking go. And most people will not go. They will sit there and they will hem and they'll haw and they'll be like, man, should I buy here? But there's resistance here and there's this thing down under here. But what if I do this? And then they're just absolutely paralyzed by analysis. They call it analysis paralysis. And then they don't end up doing anything. And unfortunately, well, fortunately, you have to actually do something to make money, guys, or lose money. So typically then price will move. Now they're getting a worse entry, but now they're FOMOing in. They're buying on a big candle and it's not really... It's not really effective, man. It's not really a good way to trade. So still long. Let's get rid of the daily here. Or excuse me, let's get rid of these chart patterns. Let's look at a few other things. By request, I have somebody who uses this as their baseline, and they were showing me their results last night, so they're going to be watching the show. They know what we're talking about. This comes from a member of the group, and this is their baseline. It's a 26 period Donchian. You guys can hack this by using the Ichimoku. And this is the baseline that they utilize, and they were showing me their results here on BTC USD. And they're pretty good. So one thing that they just wanted me to point out, and again, keep in mind that this is their own strategy, but if the daily closes like this, we will be closing above the baseline. So this person in our group says that if we end up closing like this, they're going to move their funds into BTC. So just interesting to point out and something for you guys to play around with. I have another member of the group, actually several, who are not using the 13 whatsoever, and they are using the 55. So the 55 is their baseline. And they say they prefer that a lot better because it's far less choppy. So I think that there's a very specific reason to use I don't think there's any non-validity to using a higher period baseline. I think that when you use a lower period baseline, a more sensitive baseline, you're going to trade slightly different. You're going to be a little bit more active. And everything just needs to change, right? You need to start, and we teach you where to start in the group. We teach you how to start with the initiator and then build up. Texacoat LTD says, didn't the stop loss get hit at 10,462? I never had a stop loss at 10,462. When I took my trade, my stop loss went here. Around 9,800. So anyways, I wanted to point that out. The 13 and the 55, or the 55, excuse me, we are above the 55, utilizing that as your baseline. And if we bring over CCEMA, Chattery, you bring up a very good point. We did get that 1355 daily cross under, which again helped us out with a pretty good, that actually occurred right over here, and helped us out with our last profitable short trade. Now we are about to see that switch around and take the trade to the upside. Now here's what can be frustrating as a trend following trader. It is very rare that we're going to see that, like, okay, so let me explain what I mean. So we got the cross under and we're like, oh, that's a trend following signal. We're going to go short. And that's like, oh man, price didn't go down to 7,000 like we thought it would. I mean, it went down quite a bit and there was a profitable trade there. We made quite a bit of money from doing that. But you know, we didn't hit all three of our take profits. Price did come back. We only made profit on 50% of our position. And now and now we're getting the long signal. So it's like, okay, well now we're going to go long. And now we might be getting that 1355 daily cross up, which is a bullish signal. And, you know, maybe price runs up here, or maybe it doesn't. Maybe it turns around. Now, I'll say this. There are going to be times when ranges can make your trading difficult. The way that we trade with our filters gets rid of most of those problems. See, most trend following traders don't use filters, and that's why they're going to get torn up in ranges. We don't really do that badly in ranges with our filters that we use in the group. But yeah, I mean, I've never really seen it cross up when I'm talking about specifically the 13 and the 55 daily moving average crossover. You know, I've seen it happen maybe 3 or 4 times. you don't really see it too often than that because you're talking about the daily. Now, there's nothing to preclude it from happening 97 times, but I've never seen that. So just pointing that out, man. But yeah, back above all of our daily exponential moving averages here as well with CC EMA. And so whatever baseline that you're using, we're above it. And like I said, good volume yesterday on the daily. Now that could mean one of two things. Nice big volume spike like that, ascending volume. Again, if we zoom out, it's not the most impressive trend ending volume that we've seen. But we do see a big volume spike here at the end of a trend. We do see a big volume spike here at the end of a trend. And we are seeing a big volume spike now. So basically two possibilities. That's pretty simple. Everybody knows this. Big volume spike in conjunction with being at the top of this area of resistance, bouncing right off of our resistant order block that we had talked about from 10,882 to 10,968. That big volume spike is going to indicate a buying climax, and the price will move down from here. I have an early warning system to be out of my long trade, and we can see this consolidation taking place on the 4-hour time frame. When we get down here, I'm really keeping my eyes on this bullish breaker from 10,462 to 10,389. That is going to be the level that invalidates the long trade for me. Just applying a little bit of nuance. Again, what got me in. I took Ethereum USD, though, to the downside to hedge. So that's actually doing quite well. If we go look at what Ethereum USD has been doing ever since I put on my hedge, it's been moving to the downside. So I'm actually overall net up. In fact, more than net up on this BTC FUSD split. So I'm really prepared for whichever way price goes. Again, if we do end up closing below 10,389, I will exit the trade. But I can see us bouncing up here for a while. And again, from a fundamental perspective, I would not be surprised to see everybody who has gone short here has their stop loss here, has their stop loss above 10,968. I would not be surprised to see that get hunted. Now, is it possible that we don't see that with the big volume spike coming in yesterday? It's possible. It's a good volume spike. And again, volume spikes are indicative of the end of a trend and the beginning of a trend. And I'm not going to lie, this type of structure is generally more indicative of the end of a trend because price comes up, hits resistance, big selling climax, and then price moves down. Often, if you're going to get the initiation of a trend, it's going to be a very large candle. So, for example, you see a volume spike here, for example, and it led to a short-term bullish trend. And you see, volume spike here, for example. You're going to see these volume spikes typically at the beginning of a trend. But yeah, I mean, we've had 16 hours of like boringness, man. Crypto Tiger says, check Discord. I think I found your double. What's your Discord name, mate? All right. Sorry, that's more I got to give to... Okay. Anyways, yeah. And you know what's funny is I was talking with a good friend last night. And he's like, yeah, man, Bitcoin's price ain't gonna do nothing for 16 hours, dude. So you just go ahead and go to bed. And I was like, all right. And he was right. Oh, in general chat. I don't know. What do you guys think? You saying the all bald people look the same? Racist. So anyways, we'll see here, guys. We'll see. That's going to be my early warning signal, closing below that 10,389. If that happens, I will, I'll be exiting my position. Previously, yesterday, I was talking about exiting half of it. I won't be. I'll be exiting all of it. So what's really going to make me smile is if we trade sideways and then right on up at or not even like directly up like that. Like everybody's thinking like, oh, it has to do this or it has to do this. But if we just kind of trade like sideways for a while, I swear to God, you're going to see all the crypto Twitter analysts be like, well, this never happened before. The book never mentioned this. Quick, Donald, what do we do? Uh, 10,597. Texacoat. Dan says reluctantly, thank you, man. Let us know when you're buying so we can sell. So a couple other areas of note, just you know, so you guys kind of have, in my opinion, some objective levels to help you out. Obviously, we have the daily. We've got this daily order block of resistance, and that is at 10,968 to 10,882. So typically with order block levels of resistance, it's actually a bearish breaker right now, excuse me. So it's a bearish breaker. So that level, again, you're supposed to sell that level. So again, that would have given you entries right here at the breaker at 10,882. The high of yesterday's candle on ByBit was 10, or excuse me, no, we missed it. We missed it by $12. So we missed it by $12. Missed it by $12. So my bad. Never mind. I didn't say anything. But bullish or bearish breaker theory, you're supposed to sell that level. If you see it get broken, it becomes a bullish breaker, and then you buy all pullbacks into it. But again, I'm kind of looking for that to get broke. And so same thing with this 4-hour bullish breaker that we have below us. This 4-hour bullish breaker was pretty significant. You can see it was broke here, fell back through, became a bearish breaker, pop, 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 pop. And now we're back. Now we're just kind of trading in this tight little range and wedge that's overall not super exciting. I'm not going to get super panicked if we dip back down into this breaker. It's really no reason to get panicked. You want to get panicked if you end up closing back down below it. And we are right on the 13 baseline. And if we bring up our EMAs and look at our 21, got this nice little converging. 21 sitting right down. So our tertiary baseline, which we've talked about using as dynamic support and resistance, is sitting right down at that bullish breaker as well. And our secondary is sitting back down at 10,204. I wouldn't want to see it close below the 21 on the 4-hour. All right, so let's go. It is 12:55, so we're going to take a quick break. We are going to take a quick break, guys. And when we come back, we're going to talk about the latest in news, and we're going to look at your chart requests. I think a lot of people want to look at BNB, so we'll definitely look at BNB. And I will answer the eternal question. How do you set up ByBit with a VPN? So we've got Alan Greenspan warning of negative interest rates in the United States. This will dovetail pretty nicely with what we were talking about earlier. We've got the XRP army now calling for Ripple to redouble its efforts of dumping the token. We've got Twitter CEO Jack Dorsey saying there will never be a Twitter coin, and he endorses Bitcoin. And probably the best story of the day is we've got Binance, which is launching BUSD, which is its new alternative to Tether. So seeing as how Binance seems to basically take everything in the market and monopolize it, we'll see how they do with Tether's market share. Anyways, guys, before we do that, let's talk about... Hey, guys. So as a trader, I am commonly asked what metrics I use to evaluate an exchange to trade on, and I always say the exact same thing. Security, ease of use, and customer service, with an emphasis on customer service. Now, I used to trade on BitMEX quite a bit. I experimented with Deribit. I ended up making the switch to ByBit, majority reason for their customer service. So, as far as ease of use, they've got a very simple to use platform. I can do all the advanced stuff on there that I want, and they have a very good roadmap of features that they're going to implement, as well as far as security. You guys know the deal with cryptocurrency exchanges. I have a strong bias toward margin exchanges because that allows me to have the ultimate security, because that allows me to put my funds in cold storage and use margin to continue to take the correct position size without the requirement to deposit all of my funds onto an account. And as far as customer service, you can't beat ByBit. I mean, literally, there's hands down the best customer service. They have, there has not yet been a problem that has been brought to me that they have not solved, and with quite good grace as well. Anyways, guys, so if you guys would like to try out ByBit for yourself and see why BitMEX sucks nowadays, you guys can go to bybit.crackencryptocurrency.com. Links in the description down below, or bybit.com/a/cc. Oh, that's a lot. They've got a special deal right now. If you guys use our link until the end of September and you deposit 0.1 BTC, they will give you $60 in your margin account as a margin bonus. If you deposit 0.2 BTC, they will give you $110 in BTC to trade with. You can withdraw all the profit. Again, that deal is only available until the end of September. But again, if you guys want to make the Pepsi Taste Challenge switch, go check out ByBit, bybit.crackencryptocurrency.com. We'll be right back, guys. Don't go anywhere. When we come back, we're going to cover all the greatest and latest in current events in cryptocurrency, and we're going to take your user-submitted chart requests. So don't go anywhere. Boom. Hey guys, welcome back to the second hour of the Breaking Bitcoin Show. I'm your host, Justin Wise. If you're just joining us for the second hour, make sure to go check out the timestamps if you're watching this after the fact, or make sure to go back, check out the first hour. We did a full Bitcoin analysis, and we had quite a long talk about the 1929 stock market crash, the 2000-2007-8 financial crisis, inverted yield curves, and what is up for the future of American economists, or for the future of the American economy, that is, from my humble perspective as an investor and trader in this space. So let's get on with today. We've got some fantastic stuff to talk about. And we are also going to let you guys pick the name of the new chair. And we're going to give away $25 in Bitcoin to one lucky winner. So with that being said, let's get right into it, guys. Hey, and we're back over here in the live scene back in Candyland. We're caffeinated and ready to go. Mississippi grog. Oh, God. Ooh. Oh, man. Sorry, it's so good. Okay. So here we are in the live scene. And so what I want to do is first off, let's do the Twitter poll. Let's do that. So let's go to profile. And let's just go over here and I'll pop this in the chat. All right, so there's the Twitter page, guys. You can go to tw.crackingcryptocurrency.com or twitter.com/cracking_crypto to go to our Twitter page. And whoops, and it's going to look like this. So I posted 7 options. And we have, you have to scroll all the way down to the first one right here. So what shall the new trading chair be named? So you have the chair name suggestion and the person who suggested it. And so everybody gets one vote. And this is open for a day. We'll leave this open for a day. So go and cast your vote. Whoever, whatever gets the most votes, that will be the name of the new chair. And then whoever suggested that will get $25 in Bitcoin. So thank you guys very much. Let's honor Sally's memory. I want to read off our options here. We have Bench Apiro by GBU Wally, Sit Toshi by When Was Now, Bitsy by David Rice, and The Bit Chair by Yvonne Vander R, I do believe. And personally, you know, Bench Apiro, you just can't really beat that, but I really like The Bit Chair. I'm not going to lie. So that means I'm probably not going to get it. We have Sita Atar by OneFlyVW, The Black Widow from Moonshine Fuel, Mesh L from Userish X, Kadrega from Audrey, Wave Rider from Elijah Finch, Sasha by Jeff Handsome, Sasha from Dutch Crypto Overview, Bum Quisha, a personal favorite, from Spoon Powered 23, Rest Master from Mish Lecter, Olga from Andrew, the Apollo 11 Moon Mission Pilot Chair from Zero Cool, Wheelie McCity Bench from Wendy Brown Eye, Cherie from Adriana, Nifkins from Turd Ferguson, Skywalker from Nate's World, The Dome Throne from Jay Kreutzer, Black Betty Bambalam from B-Flow, Iron Chair by Onathan Kano, I do believe, Crypthronius from Mastache, and Crypto Chair from Alexander B, The Bull Chair, Trade of Thrones, Leia, and Cracking Coin. All right. So those are the options, guys. Go let me know. You guys are in control. The power's in your hands. You guys get to select what the name of the new chair is. Let's honor Sally's memory and let's get rid of this uncomfortable gaming chair for me, please. Yes. Okay. I want to list off some honorable mentions that unfortunately did not make it to the competition. And of course, those are going to be, for various reasons, Dark Lord Sith, Throne of Games, Elvira, Riley Reed, Lucky Ass, Nitoshi, The Crypto Chair, Zelda, Big Chungus, Keister Feaster, Zelda Nakamura, Lacey Lucy, The Spinneroonie, Martha, Cloud Chair, Alpha, Pamela Anderson, Asonius, The Bull Chair. No, I think that made it. The Black Crack. Sorry, guys. That's not going to do that. The Black Tar Chair Owen, The Fart Deflector, Smelly, and My Face. So sorry, guys. Those did not make it into the competition, but thank you so much for the suggestions. Let me know what you guys think. The power is in your hands. Let me post this in the Discord so we can get this going as well. And actually, you know what? I should probably put that in announcements. I'll just put that in announcements. There we go. Oh, I at everyone twice. Whoops. All right, guys. Looking forward to seeing it, and the power is in your hands again. Are you telling me that the fart deflector didn't make the cut? I love you guys, man. Bitcoin dominance is at an all-time high since the 17th of July. What are my thoughts on it? I honestly think less and less that Bitcoin dominance matters whatsoever, to be honest with you. You know, it's just one of those things where I haven't been able to really find a good signal out of it, right? Except for a couple hindsight things where people are like, oh, the market seemed to turn here. I'm really of the strong opinion that once people start saying stuff like that, that stuff doesn't work, you know? But you guys are awesome, man. Okay, so let's get rid of that. We'll check in here in just a little bit. And let's... The biggest Buddhist Thronius. Oh, man, yeah. Like, why didn't we think of that one? But anyways, let's head over to the news, guys.
And now, the news you trust, the stories you need to hear. Because in the day and age when we get our news sources from YouTube and Twitter, let's listen to the guy with the good microphone and the nice-looking studio.
Very good ventriloquism. Okay, here we go. And let's get right into it with today's top story. All right. From the Crypto Potato, former Fed chair says negative interest rates are coming to the United States. Is this bullish for Bitcoin? So in comments made to CNBC on the topic of the current economic environment, former chairman of the Federal Reserve Bank, Alan Greenspan, he of the great book writing prodigiousness, warned that negative interest rates are coming to the United States. Negative interest rates are coming. And a rise in gold prices suggests that investors are aware of the changing economic climate and preparing to hedge against a possible impending downturn. 30-year United States Treasury bond yields are indeed at all-time lows. A negative interest rate environment, by definition, would mean that cash deposits are now subject to storage fees rather than the opportunity to generate a return in the form of interest. Basically meaning that any money held in savings is now not only being eaten up by inflation, but also not earning the nominal interest rate that you would normally receive. Amid growing uncertainty surrounding market conditions, the speculation is that investors will look to safe haven assets such as not only gold, but Bitcoin as well. And the fact that this digital asset is not directly correlated with any other traditional financial market or subject to political intervention makes Bitcoin an increasingly more attractive hedging instrument to investors. Now, with central banks running out of stimulus tools and 0% interest rates becoming the new norm worldwide, a wealth crisis may emerge around the globe, giving classic hard assets as well as the new age digital ones a chance to shine. So it took 10 years, took about 20 years actually for the gold bugs, but their vindication might finally be here with gold prices obviously rising, and obviously the price of Bitcoin shooting up as well. So a lot of fundamental reasons to be bullish on the idea of gold right here. And again, we have to understand that what is the fundamental reason why the stock market inflates as well? It is due to these interest rates, because as inflation continues to eat away savings, inflation is a tax on savings because it reduces the purchasing power of money in circulation. And again, the analogy on this is very simple. Let's say that let's talk about interest rates, right? Or let's talk about inflation. So if you are working and you're making $60,000 a year, and the price of a cheeseburger is $4, and the price of a car is $30,000, and the price of a TV is $500, and now the government that prints the money now doubles the monetary supply. Well, you're now going to get paid $120,000 a year. But cheeseburgers are going to cost $8 a cheeseburger. Cars are going to cost $60,000, and TVs are going to cost $1,000. So literally no difference. Literally no difference. So inflation doesn't actively affect active income in that manner. At least it's not supposed to mathematically. Now, however, we have to talk about money and savings, right? So let's say that you're making $60,000 a year, right? Cheeseburgers cost $4, TVs cost $500, and cars cost $30,000. And you put $10,000 in savings. Okay, sounds good. Now the government doubles the monetary supply. So now you're making $120,000 from your active income. Cheeseburgers cost $8 now, and cars cost $60,000, and TVs cost $1,000. Well, the problem is that $10,000 in savings is still $10,000. And unfortunately, you only have that $10,000, and now the price of goods and services has doubled. So in that way, we can very directly see the correlation or the reason why we say, the reason why it's true, that inflation, increasing the supply of money, is a tax on savings, because wages and the price of goods and services naturally rise to meet pace with inflation. But your savings does not. Your savings does not. And this is a reason why so many people take their money out of savings, which is where the majority of people just want to put their money anyways. They just, like, if you've worked to make your money, you just want to put it in a safe place where it doesn't get eaten away. But with inflation constantly happening, you can't do that. You are forced to invest your money and give it to Wall Street. It's the only way to beat inflation. And that inevitably creates a securities bubble where the value of assets become overpriced because people are investing in them, not because they want to, not because the company is fundamentally this valuable price-wise, but because people just need a place to put their assets to keep them safe. And when the market's bullish, which it generally always is, but this might be a fundamental reason why the market's always bullish, you continue to see stock prices go up, and therefore the value of your investment continue to go up year after year after year after year until it doesn't. But as we've seen over the last 100 years, people who just buy and hold forever, they do well, regardless of the economic downturn. So keep in mind, guys, that the Great Depression, which affected the entire world, was a direct result of the securities bubble and a direct result of post-World War I. Okay. So I think that we would need, again, I'm going to correlate to what I said at the beginning. I think that although all of these things are negative for the economy, I do not see a pending economic crisis in the short term. I don't. I think that people are wrong. Now, it's possible that I'm going to be proven wrong by that, and we could just drop out the bottom tomorrow. Again, nobody knows when Christ will return. He comes like a thief in the night. But I do not think that we are going to enter into some kind of Great Depression. I do not see the ticking time bomb, overinflated bubble market that would be necessary to cause that. So, all right, next story of the day. And obviously, we never miss an opportunity to take a stab at XRP on this channel. The XRP army can't shit or get off the pot. They can't decide if they need a dump or not. So here's a rundown, guys. Here's a rundown. So following last month's petition to Ripple Labs requesting that they stop dumping on investors' heads the price of the token, the XRP faithful are now circulating a new petition. And this one, I mean, this petition either has to be for comedic relief or as a collective act of exasperation, because the new petition that's now circulating is cynically urging Ripple Labs to unleash the utility onto the world by dumping, quote, the shit out of XRP, end quote, onto more companies, colleges, institutions, board seats, and to acquire board seats, strategic partners, and dumping the token to whomever or whatever organization wants them. After all, this is a race for mass adoption, and XRP does no good just sitting in Ripple Labs' wallet. As such, the petition merely embraces the language of Ripple CEO Brad Garlinghouse, who just recently downplayed XRP token dumps as an effective strategy to expand utility and build on the RippleNet. Just yesterday, another half a billion XRP tokens were moved out of a Ripple Labs escrow account, suggesting that Ripple Labs might be preparing to unleash the next round of utility on the world. So if you guys are looking for if you're looking for a fundamental reason to short the fuck out of Ripple, every time Ripple Labs pulls money out of their escrow account, fucking take it down, man. I mean, this is literally, I mean, I want to be real here for just a second, right? I know I take stabs at XRP, right? Because it's easy and because I've been doing it I'm not doing it because it's nouveau vogue, you know? I'm doing it because I've been doing it literally for over a year, okay? Here's the thing, man. This is getting unhealthy. I mean, this is really, really getting unhealthy. I mean, I continue to see, when I go on Twitter, the absolute insanity and faith in Ripple Labs that you see out of statists, that you see out of, like, religious cult members. I mean, I think this is really, really unhealthy, and I don't know why this is. I don't know what it is. It doesn't make sense to me. Like, Ripple's a garbage token, and these people talk about it as if it has all of the fundamental value in the world, and I do not understand it, man. And again, I might be absolutely wrong about this. We live in an idiocracy. It's possible that Ripple just becomes like the biggest, baddest thing, displaces everything, and acquires the market cap of gold, Bitcoin, silver, and Pamela Anderson's bra collection all at once. I don't know, man. But what I do know is I feel really concerned for the people in the community who are emotional investors in whatever they're investing in and not rational, methodical, logical investors. Because for whatever reason, it doesn't matter who you put your faith in. Putting your faith in somebody else, like vehemently and 100%, works out for a while as long as that other person's right. But if you're not thinking strategically, if you're not making your own plans, if you're not generating your own ideas and thoughts and emotions and actually living your own life, the hero's journey of your own life, then you're eventually going to be disappointed. And all tragedy comes from people who are like, well, how was I supposed to know? I was just following along. You have to make up your own investment decisions. You have to, at the end of the day, it's you piloting your life, man. You are piloting your life. Nobody can pilot your life for you. So you better make sure that you take hold of that wheel, that you grasp it firmly in your hands, and that you do not drive that motherfucker off the cliff. All right? So again, let me state that. I don't think that I don't think that anybody is bad or silly for holding XRP, right? I think that's fine. XRP is a big cap token. I think that it could be a logical place in somebody's investment portfolio, as long as you understand that it's just an asset, right? But the problem I see from Ripple investors is that they really, in an unhealthy way, like glorify Ripple Labs or the technology or the partnerships or this, that, and the third, or the community or the strength of the community. All of those people are going to cut, turn, and run and burn. Like, nobody there, your crypto Twitter fam, does not have your back. You need to have your own back. Jay Kreutzer said, but CNN told me to buy it at $3, man. They must be right. Come on, man. So I don't know. Again, I don't want to like alienate people. Listen, everybody's welcome to our community. Everybody's welcome to be here. If you like Ripple, that's absolutely fine. I just want to challenge you, and I'm going to take pot shots at them because that's just what I do. But I just want to challenge you to like just, if you're invested in Ripple, that's fine, right? You think it's a good, it's an investment gamble for you. That's fine, right? Most of this stuff is. Most of this stuff's highly speculative. But just understand that's what it is, and there's no magical, mythical aspect to Ripple Labs, right? They're just another money-hungry company like the rest of us, right? I feel like I probably lose. I'm going to probably get a lot of dislikes on this video. Every time I talk about Ripple, I get more dislikes. Who cares? Scott's like, I care. Make sure that you guys hit that thumbs up button for the YouTube algorithm gods. We highly appreciate that. So Twitter CEO Jack Dorsey, by the way, if you guys haven't seen the Joe Rogan episode of Jack Dorsey, it's really, really good. Jack Dorsey's a pretty smart cookie. Anyways, but speaking to the Sydney Morning Herald, the Twitter founder and Square CEO Jack Dorsey stated that he has no intention of creating a Twitter cryptocurrency. Commenting on the matter, Dorsey has said, quote, I think open interest standards serve every person better than ones controlled or started by companies. Dorsey went on to reiterate his stance on Bitcoin as the, quote, native currency of the internet, sharing similar sentiments as when he discussed the digital currency on the Joe Rogan podcast. He says, quote, I think Bitcoin is the best bet because it has been the most resilient. It's been around for 10 years. It has a great brand and it's been tested a bunch. As I look at all cryptocurrencies that could fill the role of being the native currency for the internet, Bitcoin is a pretty high probability, end quote. Also worth noting is Dorsey's payment processing app, Square. Actually, I quite like Square. I've used it quite a bit. And its support of the ecosystem via its open source Bitcoin initiative, Square Crypto, seeking to pay developers to contribute to the Bitcoin community and projects with a goal of making, quote, mass adoption not just possible, but inevitable, end quote. The Square app already supports Bitcoin, generating $125 million in revenue to date, with plans to expand to Lightning Network support. We may think of Jack Dorsey potentially as one tech titan the crypto community can count on. The Jack Dorsey Joe Rogan with Tim Pool is better? All right, now, I know the moment you've all been waiting for. Dun, 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 dun. Da-da-da-da-da, from the Crypto Globe. Do something. There we go. Binance is partnering with Paxos to launch a dollar-backed stablecoin called the BUSD. Okay? I think this is pretty big, actually. So today, Binance and the Paxos company announced a strategic partnership for the purpose of launching a fully dollar collateralized, that is, a stablecoin called Binance USD BUSD. Okay. So Paxos is going to act as the custodian for the United States dollars and issue the BUSD tokens, redeemable for a 1-to-1 USD fiat to USD to fiat value. And these will be made available for purchase on the Paxos platform later this month, as well as trading on Binance with the initial pairs of BNB, BTC, and XRP. So Paxos Trust, for those of you guys don't know, they're based in New York. They're fully approved and regulated by the NYDFS, which is the New York Department of Financial Services. Rich Teo, which is Paxos's co-founder and Asia CEO, had this to say. He said, quote, the NYDFS's approval of BUSD is a vital step towards long-term stability in global crypto markets. We are proud that our stablecoin, we are proud to offer our stablecoin as a service offering. Wait a second. I feel like either this quote is wrong or... We are proud that our stablecoin as a service offering enables trusted companies like Binance to introduce products customized for their users. The Paxos brand symbolizes regularity, integrity, consumer protection, and transparency for all of our partners. CZ came out and said, quote, yeah, take that, BitMEX. What's up? Said we copy you? I'm just kidding. Binance CZ came out and said, quote, Paxos is leading the digital trust space, and we are excited to work with them in developing our native stablecoin. We hope to unlock more financial services for the greater blockchain ecosystem through the issuance of BUSD, including more use cases and utility through the power of stable digital assets. So anyways, let's talk about this. So let's talk about the difference between now the fact that we have a stable coin and a custodial service that is approved by the NYDFS, which is really the gatekeeper for something being approved in America. We have the Binance US exchange launching this month. And we have BitMEX and Tether on the verge of absolute collapse, in my opinion. What stablecoin do you guys think is going to take off? I don't know. There's a whole lot. So here I think this is speaking to some fundamentals here. So let's talk about this. There is this huge conspiracy theory that BitMEX and Tether is largely responsible for the appreciation of Bitcoin's price, right? We have read the reports, and we do know this for a fact, that the majority of the buying, of the majority of the liquidity has come from Tether, right? Meaning that the majority of the bull run participants, this latest bull run, have been crypto veterans who are familiar with using Tether, and of course, who became very familiar with using Tether during 2018, and not crypto newbies who typically do not enter into Tether. So I think that, oh shit. I just knocked out one of my monitors. There it is. It's back. I think that this will answer that question very clearly. So either that's true, either that is true, and if BUSD captures a lot of Tether's liquidity, that we would see a negative impact in BTC's price, or that's not true whatsoever, and BUSD may or may not survive or dethrone Tether. But I will say this, that moving forward over the next 5 to 10 years, he who has the regulation is he who is going to be the more successful. Except for Bitcoin, which is just decentralized and popular and powerful enough to not need no stinking regulation. But everything else, You're going to need regulation to get pushed through. Bullish Bear says, what the hell do we need stablecoins for anyways? I don't get it. So that you can actually have a stable store of value. So it's still pretty unattractive for somebody who needs their wealth to stay relatively stable. Like, so for example, for an investor, they want to have a liquid digital token that they can convert easily back and forth between Bitcoin to buy goods and services. And they want to have a hedge against the traditional financial system, but they don't want to be exposed to the volatility of regular cryptocurrency assets. Well, stablecoins, they're pegged to the dollar. Which, is, again, like, you're looking to hedge, but you're pegging yourself to the dollar. But again, the point is, a dollar is a dollar. So, but its biggest utility is for traders, right? Its biggest utility is for traders. You're going to sleep. You don't know which way Bitcoin's price is going to go. We're talking about spot traders here. And you don't want to hold on to your Bitcoin long position. You want to move into stable coins. And, when you're awake in front of the monitor, you'd like to know that if you go to bed with that if it's, 9 p.m. at night and you've got $22,000, that when you wake up in the morning, you've got about $22,000, not $17,000 because Bitcoin's price sneezed. But, Ricky Thompson says, I use a stable coin to go 1x short on Binance when BTC drops. I don't lose USD, but gain in BTC. So when I buy back in, I have more BTC. But you can just use fiat. Why use a stable coin? Because fiats are tied to governments, and a lot of us don't like that. And it's it's much easier once you have your fiat in. You don't want to go back and forth typically between fiat and USD, or excuse me, between crypto and fiat. Now, a lot of people do, and that's absolutely fine. Coinbase, Bittrex, for example, Kraken. But a lot of people just want to avoid that completely. That's kind of one of the ideas, is to get away from government currency and government regulation in the first place. And you can't use fiat on all exchanges. You can't use fiat on Binance. You can't use fiat on BitMEX or any of these other smaller exchanges, Wabi, Tether only. Because, introducing fiat requires a lot of things that a lot of people in crypto want to avoid, such as regulations, such as banking rules, such as blah, 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 which, might be good for the space, honestly. I wouldn't really deposit. So, the exchanges that I mess with are Binance, not Bittrex anymore, but I have no problem with Bittrex. We'll probably introduce support for Bittrex. Yeah, I don't think it's about avoiding taxation. I'm sure it is for some people. But you have to understand that not everybody lives in America. So there are countries that want to do cryptocurrency exchanging and trading, and they don't have maybe very stable fiat currency in their system. They don't have very stable banks that they can trust in their system. So having an alternative to that is liquid and global and universal and easily transferable is pretty attractive. Let's see here. So Oggen asks, if I invest in an alt Bitcoin pair and then short Bitcoin for the same amount, it's the same as investing in an alt USD pair or not? Okay, so if you buy an altcoin for BTC, you are trading BTC that has a dollar value. And the only thing that's going to happen is your BTC value is going to rise or fall. And that USD value is going to be dependent upon the BTC to USD rate after you follow the exchange. So alt USD Is it the same as investing in an alt USD pair? I mean, no, because those are all individual markets. Those are all individual markets. So you can have a market that is being depressed. So yes, if Bitcoin is relatively stable and Bitcoin's price drops, typically alt to BTC pairs are going to rise up, but not necessarily, because it depends on, I mean, that's an open market. We're talking about an order book, so people can sell that down. But just in general, okay, so if you short BTC for the exact same amount, the only thing that's going to change is the amount of BTC that you have in dollar terms. So I don't think that you're really gonna make any money there. The only thing that you will make is BTC. You won't make USD because you've just hedged the two values. Unless the altcoin dramatically outperforms BTC. Wouldn't there then be an arbitrage? Yes. You bring up a good point. There would be an arbitrage. Let's go. I'm going to send that to my math guy. I will have a more specific answer for you as soon as I can, man. Come on, Bitcoin. Let's do this. Okay, it's 1:49 and we've got plenty of time to take questions and look at your requests. So let's head over here and let me pull open this. Okay. Okay. We've got Johnny says the answer to your question, Ogden, depends on the efficiency of the arbitrage between the two markets. In a perfectly efficient situation where arbitrage is perfect, he is right. It would be the same as going long on the alt USD value. So in other words, just buy the alt USD pair. Not the same as the alt USDT pair. There's a difference. Okay, so we got a request to look at BNB BTC, so we'll do that. Crag and Kryto, what's going on, Yagami? Hype! And then maybe we'll talk about a trailing stop. But I think it might be better if I pull up an exchange as an example. All right. Nothing new on Bitcoin yet right now. Nice. Wick City. Wick City. Let's go to... What was I going to do? Oh, BNB. Whoa, hey, what's up, baby? Show me how powerful you can be. Jesus Christ almighty. I can buy the rumor, sell the news, man. Let's see. Let's see if my meme trend line is aging pretty well. It's not aging too bad. Let's see. We've got order blocks plotted out here. Okay, let's take a look at our system. Yeah. So here's what we got. We've got a daily reversal bias signal from time transformation. Let's go see how many times that's worked out well in the past. Worked out well here and here. And keep in mind, that's all above this baseline. No. I would say on casual glance, it doesn't look too bad, but it doesn't look amazing. Bad. I'd have to backtest this on this specific pair. But anyways, let's look at what we got. We had bullish expansion all the way down, or excuse me, bearish expansion all the way down. Here's the powerful signal from Wadatar explosion right here on this candle. Here is the original short signal from Wadatar explosion, or excuse me, from Minx. And we're bearish from this point right here, and we're still pretty far under that baseline, man. So this is not the type of trades that I like. This is potentially a reversion to the mean trade. But yeah, man. Let's go look at the baseline. There we go. And still, even under my more relatively sensitive baseline, this is a reversal trade. I don't really like reversal trades. And it's a huge bullish engulfing candle coming off the bottom. So I'd like to see if this has any staying power, man, because BNB has been in a downtrend. Let's draw some memes on this thing, man. Let's Let's see, what do we want to get rid of? This one is old. These order blocks are dead. And I think this order block is okay. I'm fine with that one. And let's get rid of these. Let's get rid of this. That's going to be better for a pitchfork if we do draw something like that. So it seems to me that one would most likely characterize this as a falling wedge. Right. Right. I think that's most likely what's probably going to get meme painted around the yard. Or a channel if you go. Anyways, we'll kind of look at that falling wedge type situation. Yeah. Even using the meme falling wedge, I don't really see anything extremely bullish about this. These are not the trades that I like to take. I like to take, I'm a momentum trader, i.e. I'm a breakout trader, especially a trend following trader. And so every indication here on the daily is this is what I like to call a bottom feeder trade. So, this is when, you have somebody at some point, some whale decide to start buying. And of course, it's kind of like a buy the news event. I typically prefer to buy the rumor and sell the news. So daily Wadatar explosion below the explosion level, below a rising explosion level, which was just coming off a bearish reset flip. You need more than one big candle to flip a trend. You've got time transformation giving you a bullish reversal buy signal. And let's look and see how oversold that bad boy is. It's only been this oversold here. It's only been this oversold here, which again, we had a nice little pump up and then a more significant drop back in 2018. Let's see. Yeah, those are the only times we've been that undersold. Here, which led to more downside, and here, which was pretty close to the bottom. So that doesn't convince me. Now, Minx did tell you to take profit on your shorts. on the 2nd of September. Should have been right here. And yeah, you had a little bit more downside. So what do I need to see at the very least? I need to see price above 22,900, 229,558 sats. That's what I need to see. Yeah. We do have a... Yeah, we do have a bearish breaker coming in at 240,870 to 236,680 as well. So that would be the area to sell. That would also be your first TP. My first TP, if I was long on this, would be 229,437. But I'd definitely take some profit now. In an uncertain market, if you happen to get a good entry and you see a big, dumb 8% candle, sell a little bit. Jesus Christ. Move your stop loss to break even. So I would make the comment, Ogden, that sounds logical, but keep in mind that the liquidity on our alt USD pairs is often quite low, right? Meaning that your volatility is going to be a lot higher. So depending on how you want to trade or what your edge is in the market, just take that into account. It's not, generally there's a lot more liquidity with your alt BTC pairs. Let's go look at a few other things here on BNB. Let's go look at the monthly. I mean, the monthly is, just from consecutive monthly closes, the monthly is in a bad situation. Let's look at our EMAs, see if we can't find any support. Now, interestingly enough, our monthly did bounce right off that tertiary baseline, 21 exponential moving average. And let's also look at so let's see, and I bet we draw another one of those little baby meme trend lines here. Maybe something like, no, that doesn't look very good. But let's draw it from the first bottom. Well, look at that. Look at that monthly trend line right there. Look at that baby right there. So, based on that, it seems that if we get below this 21 exponential moving average on the monthly, which is 205,438, which, keep in mind, it's only about 8% down. Then we close the monthly below that. It's like, it's time to sell your BNB bags, guys. But we'll see if we can get a bounce off this area. So, okay, he says, one more question regarding the hedge. If I short 1x all Bitcoin on ByBit and I want to enter long, for example, on LTC on ByBit, I have to close some of the BTC short position. So first off, well, they don't have Litecoin on ByBit, but no, because ByBit only has USD pairs. So you would be increasing your risk. So you would be making BTC, and then if BTC's price goes up, you have more BTC, you make more dollars by not closing the hedge. But if you close the hedge out, so say you have $10,000 hedge short, and you want to take $2,500 long on EOS, right? It's a completely different situation. Now, USD pairs tend to follow along with one another, but if you remove that hedge, you're exposing $2,500 of Bitcoin to volatility. So if price goes up, you are going to make more dollars now, and BTC. But if you keep it hedged at $2,500, when price goes up, you'll make BTC. I have not looked at Forex today. It's getting super late. Johnny, we should make a video on this, on the arbitrage dollars to Bitcoin to alt to USD. I think that'd be very helpful for some people. Weekly time frame. Might be getting that weekly cross under, but it hasn't happened yet. We do have time to rally. And on the daily, as I said, we're below pretty much anything. So we haven't broken any significant levels. So the only thing that you can, the only positive thing I can find here is this bounce off the trend line. That's all I can find. And it's happened once before. So let's see if we can, you know, if I was looking at this, I would say, well, I'd like to see it at least break a level of resistance. But again, that's also going to be congruent with the way that I trade anyways. So I'm saying, what I'm basically saying is I'd like to get a long signal on this by Minx flipping up, by Wadatar turning bullish, by, you know, that's what I'd like to see. That's what I'd like to see, which would basically require the price be above 230,000. 230,000. Ideally, I'd like to see it above 240,000. That would feel better to me. All in, baby. He's like, man, I saw that one trend line on the monthly. I saw a price wick right off of it. To the races, baby. Let's go. Let's do... let's see here. We only got 5 minutes left. Let's look at the list of stuff. So something on here that I can cover real quickly before we go is somebody asks for me to share my experience with Recommas. And so let's go back to Bitcoin. And so I have 3 commas. So I have the I don't know, whatever, the super dope pro plan that allows me to use BitMEX bots and all that. And I don't use any of that stuff. I just, you know, really got it to kind of play with them and check them out and see if I could deconstruct anything, which I haven't had time to right now, but I've got a year to do it, so I'm not too worried about it. They offered me like, I don't know, like a 50% thing off, like on that super pro dope premium plan at one point in time. Yeah, trailing stop. I'll try and do that tomorrow because I don't think I'm gonna have enough time to go over it, all the kind of nuance that I want to go over it with it, Chowdhury. So, just a monster double bump and run, obviously. Unlike that triple bump and run. Now, As far as 3 commas goes, I have had no problems with them. So I have had no problems utilizing my API key on them. I've had no problem trading with them. I will say that when I first started using their platform, it is a little bit to get used to, utilizing the smart trade and just making sure you're setting everything right. But I think the way that they lay it out and design it is pretty simple. I don't have any big problems with that. I don't think it's non-intuitive whatsoever. The only thing that's that irks me, but you just get used to it, is instead of like, when you're trading a regular altcoin pair on Binance or any exchange, you would say like something like BNB to BTC, right? So it's like BNB/BTC. On 3 commas, it's BTC underscore BNB. So it's the quote pair first, followed by the base currency. Unlike exchanges, which quote you the base currency and then the quote pair. God damn it, I just fucking... What the fuck, man? I keep hitting that cord from my monitor, unfortunately. My feet just got a mind of their own under this desk. So other than that, I mean, I think that 3 commas is great, man. They let you do stuff that Binance doesn't let you do as well. I know that Binance has just introduced OCO orders, but you can set automatic trailing stops. You can set, you can scale out your profit in a very simple way. They've got a lot of bots on there. I know that bots are very popular, and they've got all kinds of like bot services and things like that. I don't really think that's the way to go for a lot of traders. I think that they're going to have less success because that requires a very specific mindset and requires a very specific set of testing. And I think that ultimately people are going to be better served by learning to trade their own strategy. And then if they're interested in automating that, they can. 3 commas has a lot that they can do. Like, for example, you can set your own TradingView alerts and have those programmatically traded for you. But you also can't programmatically set your exit. So I don't like that. I don't like that I can have a specific entry system, but I have to utilize 3 commas specific exit systems. It's just like with any bot, man. You have to know when to turn it on and when to turn it off and how to adjust it. Bots aren't magical creatures. They're only as good as what you tell them to do. So because of that, I think that most traders end up losing money on them because they don't put in the work necessary. And really the work that they should be putting in is on their strategy, because if you try to put all the work in on a bot, but you don't understand the strategy that you're trying to have the bot execute, I think you're spinning your wheels. So I think that's focusing in the wrong place. I think that bots can be good tools for advanced traders who feel confident in their skills, who want to automate certain aspects of their trading, and then leave the larger trades to their discretion. But I don't think that just going in and messing around with 3 commas bots, people are going to make money right off the bat. Maybe some will, but most won't. And that's not been my experience with 3 commas. But other than that, I think it's great. I think Smart Trade is probably the best terminal in the business right now. They got pretty good support, pretty good customer service. As far as I'm aware, they have not been affected by any security issues, so that's a plus. And I enjoy it. So I think honestly, I think I would not want to trade altcoins if I didn't have access to 3 commas. I wouldn't. That's just too much work. It's too much work. And generally we find that trading, Bitcoin and the major dollar pairs are generally more profitable, or BitMEX alts. But there's quite a bit of money to be made, especially when you catch big runs and good trends, and that's exactly what our system's intended to do. So I don't think that I would ever want to stop trading altcoins, especially as long as there's a market and liquidity for them. I think that they generate some good profits. Some months they drag me down, and then some months they give me windfalls. So it's not something that I would want to stop doing. But I don't think that I would want to go through the hassle of all the different exchanges if I didn't just have 3 commas, boom, boom, bam, done. Quite easy. So anyways, guys, with that being said, hey, have you been here this whole time? I didn't see you sitting over there. Were you sitting in the weeds, in the winds, in the woods? Hey, guys, thank you so much for joining me for another exciting episode of Breaking Bitcoin. I've been your host, Justin Wise, lead analyst and senior mentor around these parts. Make sure you guys join the Discord over at discord.krakencryptocurrency.com if you have not already, to join the fastest growing community of traders and investors in the cryptocurrency space. We got some good memes there too, man, as well as good trade setups and strategies as well. And you can talk to and find somebody who is trading your strategy or somebody to give you some advice and mentorship. If you guys want to trade along more directly with us and join the premium trading group yourself, have access to all our proprietary indicators, signals, strategies, strategy building courses, spreadsheets, tools, tips, tricks, and mentoring, as well as so many hours of recorded content that I've poured my life and soul into. Make sure you guys head over to premium.krakencryptocurrency.com. It is the first link in the description down below to get started today. If you guys have enjoyed the show, make sure to support the show by subscribing, the bell icon, because the YouTube algo does not like us. Make sure to hit the thumbs up button. That is mandatory. Unfortunately, I'm sorry. Otherwise, your chair will tip back on your buttocks. Now, if you guys have any questions, comments, concerns, sarcastic remarks, and or death threats, make sure to leave them in the comment section down below. I will be back here tomorrow. Make sure to head over to our Twitter page to participate in the chair naming ceremony. So some lucky winner gets to win $25 in Bitcoin, and you guys get to name the next chair that will be with us for many years to come. Hopefully, we'll probably replace her next year. Don't tell her. Anyways, guys, make sure to check out the podcast at breakingbitcoin.money as well. If you're not able to catch the live show and you prefer to have us on the go, you can just simply download us on your favorite podcast catcher, and we're all over the place as well. So you can find all that info as well as show notes, links to everything we talked about today at breakingbitcoin.money. You guys have been absolutely fantastic. Until tomorrow, trade safely, and I will see you all in the Discord. Bye, guys.